event. So basically here when talk about this event, the question here was asking specifically about how an entity should actually account for both the adjusting event and also the non-adjusting event. And basically that is something we have mentioned, but we can summarize it here. So remember, first of all, we have what we refer to as the adjusting event. And basically you have seen that these are those particular events which provide now additional evidence about the conditions which were existing before the balance sheet date, and therefore once now this particular event occur, they will need to be adjusted in the financial statement which have already been prepared. But that should only be the case if at all now this particular event involves significant amount. So therefore in this case, first of all, we can say if this event are material of, or if this event involves a significant or maybe material amount they need or they should be adjusted in the financial statement. They should be adjusted in the financial statements which were prepared at the balance sheet date. Remember, in our case here, we have said that we talk about the balance sheet date. Basically, you have said that this is the date when the financial statements are supposed to be prepared. So, mean that if at all the financial year of a company is ending on 31st of December, then that is the date the financial statements are supposed to be prepared. It basically we refer to that as the balance sheet date. Now, on the other hand, we may be having adjusting events which basically involve insignificant or basically material amount. So mean that whether those maybe events are adjusted in the financial statement or not, they will not affect the decision which will be made by the various users. And therefore, in such a case, we say that those particular events involve insignificant or basically material amount. In such a case, IAS 10 then recommends such events can actually be ignored, because whether they are adjusted in the financial statement or not, by the end of the day, they will not affect now the decision. So therefore, we can say if this event involves insignificant amount, they can be ignored. So basically, by saying that they can be ignored, that means that the financial statement which had been prepared need not to be adjusted, simply because those particular events, they are not what? Material. Basically, they do not involve a material amount. So therefore, that's how the adjusting event should be accounted for. Basically, that is the accounting treatment of what we refer to as the adjusting events.